morning, everyone. Yesterday we saw US market bouncing back, mainly on account of whatever the development which are happening on NATO or US meeting in Europe, wherein the sanctions which are likely to come are not likely to be as severe or anything which is more than what was expected. So the market had seen that as a more of a positive sentiment and had seen some bounce back. If you see the oil prices has corrected marginally from peak of around $120. Now it is at around $119. Mainly on account of EU, that is European Union, is not likely to put sanction on Russia import of oil, and also the concerns on the disruption in pipeline from Kazakhstan is also seeing that some supply can continue, though not full, but at least some supply from that pipeline which got disrupted can continue in the coming period. Apart from that, if you see the futures of the US market are more of a flattish, and even Asian markets are seeing a mixed trend, wherein some markets are positive but the other are negative. So more of a sideways market are giving indications for the coming day. So now request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, yesterday we already mentioned that Nifty trading within the range. Downside support place around 17,040, 17,000, that is 200 DMA. Yesterday Nifty managed to close about near the 50 DMA and managed to close about 17,200 level. So we expect further momentum towards 17,340, 317 and upside, that is 100 DMA. So we expect Nifty trading within the range this today and next weeks. Also, this range will be the, we can see the 17,370, 400 and upper side, and downside 17,040, 17,000 and downside strong support zone. Bank Nifty trading the below the important support zone, close below that important support, that is 36,600. 35,600 and close yesterday below that important support zone. So if Bank Nifty intraday break again sustained above 35,600, then we expect further momentum towards 37,000 and 37,300 in upside. Immediate support place around 35,400, 35,150 at downside. Nifty Finance also trading near the resistance zone, that is 16,500. And above that, then 16,517, 16,700 next important resistance for Nifty Finance, and support place around 16,370. And stock specific, India Glyco looks positive at current level. Upside we expect target around 970, 980, and downside immediate support place around 890, and below that then we expect further pressure, but we expect the positive momentum in current level. UPL also looks positive at current level. Laurus Lab also looks positive at current level. L&T trading near the breakout level. If today also again L&T breaks 17,780 level upside, then we expect further momentum in towards 1840 and keep a stop loss around 1750 at downside. That's it for technical. Derivative I can carry.
Thank you, Vikas. See, on the derivative front, nothing much has changed. The PCR has fallen below the 1 levels in the past 2 days. Also the VIX is trading around the 24, 25 levels. Open interest is at an elevated level as well. So not much change here. We believe for this week or for today, Nifty will remain majorly range bound with 17,300, 17,350 being a resistance on the upside, and about 17,200, 17,100 being a support level. So majorly for the next 3-4 days, we expect Nifty to trade in between 17,000 to 17,500, and range bound trade for a few days is important for Nifty. Nifty. That is about the data. From the stock specific front, some buying was seen in cement, especially Ultratech cement. Short covering has been seen here, and believe some buying can come in further from the cement pack. So Ultratech, ACC, Ambuja, these are the stocks to look out for. From the banking front, they've been weak, and we expect banks to remain weak for the next 2 or 3 trading sessions. They were all near resistance with high open interest, so likely to see further fall going forward. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. So yesterday, no, there is talk about auto sector getting impacted because of increase in steel prices, which is likely to happen April onwards. The scene is that with coking coal prices expected to remain elevated due to sanctions on Russia, steel mills are looking at almost a 15 to 20,000 per ton kind of hike for steel which is used in automobiles. And they have a 6-monthly kind of contract. So last price increase happened in October, and now in April it will again happen. So negotiations are expected to take place, and we expect that even if the hike is say close to around 10,000 per ton, then from current HRC prices of 70,000 per ton, it increases almost 15 odd %, which seems to be quite big. And so the margins of auto companies should continue to remain under pressure if that happens. SBI has tied up with PNB Housing Finance to extend affordable housing loans via the co-lending arrangement. So this is positive for PNB Housing Finance. Zen Technologies has received an order from Indian Army for design and development of a prototype of integrated air defense combat simulator, which has to be delivered within 7 months. And on completion of trial runs, the Indian Army will procure 16 such simulators from Zen Technologies. So positive for Zen. And lastly, IDFC mutual fund sale is the process is going forward. A consortium of Bandhan Group, GIC and Chris Capital on one side, and another consortium of Invesco Mutual Fund, Warburg Pincus and Kedara Capital are the 2 contenders which are in line for acquiring IDFC Mutual Fund. The bids are likely to be in excess of 4,400 crores, which was close to the expected amount going around in the markets. So overall, the developments are positive for IDFC Limited. Thank you.
Good morning. We have seen cement companies taking a price hike in the month of March as compared to previous months. After staying muted for 3 months, prices in March have risen past the November peak. This price hike may help the cement companies to partially offset the impact of higher input costs, which have surged rapidly amid the ongoing Ukraine-Russia war. The pan-India average cement price rose by over 10% to 395 per bag on a month-on-month basis and 11% on a year-on-year basis. We believe cement consumption will be better in Q4. However, the full benefit of the price hike is expected to reflect only in Q1 FY23. We remain neutral on cement sector. Thank you.
Yeah, apart from this, we yesterday interacted with the management of Aarti Drugs. The company is into API for pharma companies. We had seen that their result got disturbed in last 3 quarters. Last year was a very good year, but thereafter, because of the increasing input cost, their result got disturbed, and the margin which went up to as high as around 19-20% came down to 12% in last 3 quarters. Last quarter, that is the third quarter, we had seen some improvement as compared to second quarter, but still lower than the last year levels. But what management is indicating that the prices, the raw material prices which were correcting in the month of December and January, has again bounced back in February and March. And apart from that, lot of cost push is coming from the energy, that is power and fuel cost, that is because of the coal price increase, and also from freight as they import a lot of material and also export to the international market, and also in the packaging cost, a lot of costs are getting increased. But overall, what we feel that the company can manage to retain a last quarter margin in this quarter. But overall, in the long run, wherein the cost is generally getting passed on to the consumer over a period of time, what we see that the margins can bounce back to their normal level of around 16%, and in long run can further increase to around 18% in next 2-3 years. These margins can have a positive impact in a long run. Though short-term company may see some sideway movement. We had seen the share has corrected from the peak to a substantial level. But what we see that near term, the outlook remain more of a flattish or sideway movement. But long run, yeah, definitely stock can see some good returns from a perspective of 1.5 or 2 years. So one can look to accumulate this stock in a coming period. So overall outlook on Aarti Drug is positive from a long-term perspective. Share is available at attractive valuations of around 14 times FY23 earnings. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.